Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW SYS008 traders. The title of the video is Know Why the Third Elliott Wave is Often the Longest. Alright, in this video we're going to discuss why the third Elliott wave is often, not always, is often, okay, the longest wave. Recently, I've been recording videos at 24 Elliott Wave YouTube channel. We were talking about why, all right, the first Elliott wave should not be cancelled by the second wave, okay? Why the fourth Elliott wave should not overlap the first wave, all right? And also why the third Elliott wave should not be the shortest impulsive wave, all right? Today we're going to talk about why the third Elliott wave is often the longest wave, okay? It is one thing to know, and it's another to understand. One can know, okay, by learning, all right? But through practice, we understand more, all right? So I'm going to share with traders, because when a trader is increasing his or her understanding, he or she will make a better decision. So you don't only know about the wave principle, you try to understand also the wave principle like the expert. And then you are able to improve your decisions, all right? This is what we are trying to do here. All right, let's get started. Why the third Elliott wave is often the longest wave. I have counted 5 waves here. The first wave is from here to this point here, all right? And in this case, the first wave has been divided into 5 waves. 1, 2, 3, 4, 5 waves between these two vertical lines. And then we have the second wave, which are labeled in pink here, from here down to this level here. And as you can see, the third Elliott wave in this case is not always the longest, but in this case is the longest wave. You can see here, all right, in the direction of the trend, okay, the third Elliott wave from here to here, and the fourth Elliott wave from here to here. The fifth Elliott wave is not from here to here, it's all the way up here. When I was posting a chart at Facebook and also at Google Plus recently, there was a bit of cock up here on my side. You see here, when we adjust the chart, we can move the chart like this, okay? So something has happened. On the previous screen, when I was doing something else, my chart was like this. You see, the two candle was hiding. You see here? On my monthly chart like this. Hold on. Can you see it? All right? It was something like this. So when I was counting my wave, I forgot to adjust my chart, and I labeled the fifth wave up to this point. So if you are following us on Google Plus or Facebook, my apology for that. So now you see why. But nothing has changed because we are still in the fifth wave. So what I will do, I was saying to traders that this stock Home Depot, we find it very difficult to cross the level of $100. It's not $100, it's up here, this level here. So in fact, if I put it to the right place, all right, so what, because when I was recording that, so we were here in the month of January, this is the month of January here, so you will find it very difficult, correction, not 100 level, we find it very difficult to cross the level of $106.47, so let's roughly put it, round it to $106. So, okay, so the fifth Elliott wave is up to $106, okay, not $100, okay. So we have counted 5 waves. In this case, as you can see, all right, according to my wave counts, okay, this is the third Elliott wave on the monthly charts, all right. And in this case, it is the longest impulsive wave. So when we are saying that the third Elliott wave is usually the longest wave, we are talking about the impulsive wave in the direction of the trend. So the motive wave is formed of the first, second, third, fourth, and fifth wave. So when we are saying that the third Elliott wave is usually the longest, we are comparing the third wave to the first wave and the fifth wave because we have a 3 impulsive wave, all right, in the direction of the trend. The same thing is true in a downtrend. Though the stock that I'm looking at here, Home Depot, listed on the Dow 30, all right, is in an up move. The opposite is also true in a downtrend. So everything that I'm saying now, if I say resistance, okay, the opposite is support, all right. If I say uptrend, the opposite is downtrend. So but I will use this stock, okay, but I want you to understand that what we are discussing, the opposite is also true in a downtrend, okay? Why the third wave is the longest wave, all right? Now, according to our guidelines that we use at 2-4 Elliott waves, all right, we want to see first a consolidation, all right, and then breakout, pullback, second wave, third wave, fourth wave, and fifth wave. This is our pattern. Consolidation, breakout, pullback, second wave, not canceling the first wave, and so on, and so on, and so on, all right? But sometimes you may not see a consolidation. You may see, okay, a correction, all right? And then a new cycle may begin without a consolidation. As you can see on this monthly chart, we didn't have, let me see, adjust my chart a bit, all right, without hiding anything there. So you can see here, if I stand, hold on please, we're on a monthly chart for Home Depot. So what has happened, we have a 1 Elliott wave cycle. This is the multi-wave. In fact, somewhere here, see consolidation, consolidation, and then, okay, multi-wave. I don't want to go into this. Multi-wave plus A, B, C correction. All right? And then a bit of a complex correction taking place in this section here. So if you accept that, or one, a bigger 1, 2, 3, all right? Forming a double bottom pattern. This is a correction section here, this zone here. The price was correcting itself after this trending first, all right? But then after the correction, we have a new cycle that is starting now. So first wave, second wave, third wave, fourth wave, and a fifth wave. But as I explained to you, do not forget, a wave count on a one-time frame can be a mini or a minor wave count in a higher degree. What do I mean by that? Which I talk about all the time. From the monthly chart, we can go to the yearly chart to see a bigger picture, all right? So you see, we may say on the yearly chart, first wave, all right, second wave, and we may say we are in the third Elliott wave, all right, or something like that, okay? Let's go back again to the monthly charts. And we want to talk about why the third Elliott wave is often the longest wave, all right? One of the reasons is that during, okay, the first wave, all right, resistance, as we explained to traders in our guidelines, the first wave is the signature of the first bias. It's the signature of the big institution, the hedge fund, the smart money that were buying during a consolidation period. So that's why we say consolidation and then breakout. So the first wave is the signature of the first buyers, the core buyer that will sustain the trend, the motive wave. All right? But technically speaking, the first wave will break resistance on the left-hand side. This is our guidelines. All right? So because usually what we see, okay, all right, what we see, as I explained to you, suppose there was an uptrend and then there was a correction, okay, all right, and then a new cycle is starting from here, all right. So the first wave will be the one breaking out of resistance level. Why we have resistance? Because the prior move was bearish here. There were sellers in this session, so they were selling. They were resistant on the left-hand side, and the first wave will break them out. When we say that resistance were taken out, All right. Remember that the opposite is also true in a downtrend. In a downtrend, the first wave will break support levels on the left-hand side. Okay. So when we say resistance are broken, what we meant by it, what we mean is that for instance, stop loss are taken out. So the bear that was selling in this session here, all right, some of them, if they have their stop loss somewhere up here, okay? So the bear stop loss are taken out. So when a bearish stop loss is taken out, what's happening, all right? This bearish trader will become a bullish trader. So to close a bearish position, all right, you must buy your bearish position. So how do you close your bearish position? You buy back, okay? So you are selling at the time when you are about to take profit, you buy, okay? So these sellers, as their stop loss is taken out, their stop loss is taken out, creating a bullish momentum. So stop loss were taken out. You may see sometimes when the stop loss are taken out at a breakout point, you see how the price run fast, because these stop loss are orders, okay? They are orders to buy. They are orders to be taken out. So a bearish position, the stop loss is an order to buy, okay? You want to buy and get out, okay? So as this price breaking resistance on the left-hand side, these orders, these stop loss orders are taken out, creating, okay, a bullish momentum. That's why, but as this is happening, we see now that what has happened before in the prior move, bear was selling, okay? Now the first wave is out. So it's like a first challenge to the bearish sentiment. Suddenly, for the first time, the bearish traders are more afraid to sell. They are no more confident to sell. So what is happening, because some sellers have their stop loss here being taken out at the first place, all right? Other buyers that are other sellers that were more, okay, courageous may move their stop loss or remain in the market, okay, waiting for the price to go down more. But to their surprises, the price continue to go up and their stop loss also will be taken out. So the first wave, okay, from the beginning of the first wave into the beginning of the third wave, stop loss are taken out. The bearish traders, if you look carefully here on you see here, so there was bullish progression, and then we have a correction, okay? So these are sellers, okay? They have, some of them will be still in the market, maybe have their stop loss in this region, okay? All right, some may have their stop loss here, all right? Now the first wave takes some of the stop on the left-hand side here, all right? And now the third wave is underway. All this session, if there are orders that are stop loss orders, which are orders to buy, in fact, to close bearish position, these positions, as they are closed, we create, okay, a dynamic bullish momentum and will propel the third Elliott wave to a far end, all right? So this is one of the reasons why the third Elliott wave is usually, okay, the longest way. You have to understand why carefully. There are originally, at the beginning, some smart money, hedge fund, big institution, okay, knew that the financial instrument is oversold or is due to start a new trend. So they are buying quietly when the general public is not aware of what's going on behind the scene. Suddenly we see the first wave because everybody else will want to sell. But some people knew that the stock is about to start a new trend, that the fundamentals are changing, all right? So as the first wave is underway, stop loss are taken out, and, okay, the third wave, now that the first buyers reveal their hands, so to speak, because the first Elliott wave is the signature of the first buyers, the smart money, all right? So as now, we see now that, okay, it looks like this is the first wave, we want to join them. So we have the first buyers that are buying first before everybody else. They didn't come out of the market. They are still in place. If they did come out of the market, what will happen? The second wave will cancel the first wave. So if the second wave did not cancel the first wave, it means that the first buyers are still in the market. The core buyers are still in the market and are supporting the trend. All right? They must support the trend. They are the big institution, big financial institution, and they must support the trend. All right? Now, so we have those first buyers in place. They didn't move. They are in place. Now stop loss are taken out by the first wave. These stop loss orders being taken out become what we call buy orders, because in fact they are buy orders. So we have another additional buying activity, not real trading buying activity, but bearish stop loss being taken out, adding more fuel to the trend. That's why one of the reasons why the third Elliott wave is the longest is that resistance are taken out, stop loss are taken out, plus the original first investors. That is another reason why the third Elliott wave is prolonged. All right, if you say the longest, it's prolonged, it's extended. All right, another reason I will explain it to you. Okay, which is very, very important. All right, is that the third Elliott wave is the easiest wave that one can identify. Now, some traders may disagree. I can tell you that's the easiest way to, identify, right? Read the Elliott wave is the easiest way to identify. So, once traders see breakouts, and a pullback higher low like this is an invitation to buy. So, we have in the market first buyers, smart money, hedge fund, big institutions that were in place using the fundamental, knew that a new trend is about to begin, the sector is about to go up. They read the market carefully. They were in place before everybody else. Now, they reveal their hand with the first wave. The first wave now taking some stop loss on the left-hand side, all right, adding more fuel to the bullish progression. Now, after the first wave, we have a second wave. Now this time, during the second wave, which is also true, you will notice that the volume, the trading volume is light, it's not high, So people notice now that this pullback, these are not sellers, it's just a kind of a profit taking. So another information for the general public is that first wave, pullback on a low volume, now everybody is looking out and say, this stock now is becoming a little bit clear to many technical traders that were not aware of the fundamental analysis. So now they see on their charts that this looks like the beginning of the third Elliott wave. The MACD indicator, as you can see, the standard MACD cross above the zero line, which we see very often at the beginning of the third Elliott wave. The price pulled back after MACD crosses above the zero line, and they are saying that this is the third Elliott wave. So apart from the fundamental traders, the smart money, the eagle eye investors, so to speak, were in place. Now stop loss were taken out, adding more fuel to the trend by the first wave. Now we see the second wave also pulling back on a low volume, giving another indication that the pullback is not bearish. It's not a strong bearish momentum. Now technical traders also join the group. So we have fundamental first buyer, core buyers, stop loss be taken out, adding more fuel. Now we have technical traders that have now waken up and understand that this is the third Elliott wave, the easiest wave. The general public traders that understand a bit the price analysis will also see that this is the third Elliott wave that is about to begin. So the market, in fact, at the beginning of the third Elliott wave is saturated by buyers, first buyers, stop loss be taken out, low volume on the second wave, technical traders joining the fundamental trader at the beginning of the third Elliott wave. Now, as the third Elliott wave is underway now, at this point in time, now people start talking about it in the news, saying that this stock is about to go up. Analysts are speaking clearly, everybody talking about it in the newspaper, that this stock, the fundamentals are solid, they are getting more market share, and people should buy. And everybody, from the grandmother to the children, everybody joining and want to buy at any cost. And this will propel or prolong the third Elliott wave. All right? Another reason why the third Elliott wave is the longest wave, okay, another factor that, creates this feverish, bullish momentum during the third Elliott wave is because the fundamentals are solid, okay? So now the stocks start going up during the third Elliott wave. You see the first wave, second wave, people start buying. Now, the skeptic that was standing aside, people who did not believe that the trend is about to begin, now they start digging into it. Now, some of the market participants that were not aware of it start going to the books, Google Finance, Yahoo Finance. They perform Google Assist tests. They do all the fundamental verification. They know that this stock, in fact, was oversold for a long time, okay? And the financial, talking balance sheet, cash flow, and the rest is quite solid. The third Elliott wave, the foundation of the third Elliott wave is the financials. The cash flow, the sale, all right? The balance sheet, the current asset, the current liability, the long-term liability, everything working beautifully, supporting the bullish trend. The opposite is also true in a downtrend. During the third Elliott wave, we should see a clear degradation of the financial. The financial instrument will fail the Google Assist test. You'll see a lot of liability, sell declining, losing more market share. You see sometimes some CEO resigning, all right, all kind of news, bad news coming for the company, and another company in the sector, okay, dominating the sector, all right, taking this company's place, all right. So apart from everything else that I've said so far about the first bias, the first wave breaking resistance on the left-hand side, taking out stop loss, okay, low volume during the second wave, indicating that a new trend is about to begin. Technical traders now realizing that the third wave is underway. The third wave is also the easiest to spot, easiest way to spot. General public joining in, but at the end of the day, remember, the foundation for the third Elliott wave is a strong fundamental, strong financial. If you see a third wave underway, all right, suppose you see that it start going up, and you go and check the company fair Google Assist test, they are losing market share, you can bet on it that it will not be prolonged. The trend will fail quickly. It will not even achieve the magnitude of the first wave, as I explained to you last time. It will not. It's very important to check the fundamental during the third Elliott wave. So one of the reasons also that the third Elliott wave is prolonged is because the fundamental, if it is an uptrend, okay, will be very, very strong, sound, and beautiful. All right? There are other reasons why the third Elliott wave is prolonged, is often the longest wave, is the market sentiment, okay? The market sentiment. You will notice very often, you see when you have here, you see 2011, okay, up to 2013. How is the market environment that time, all right? The policy made by the Federal Reserve is supporting the stock market at that point in time. We came out of the 2008 to 2007 bearish season, all right? The Federal Reserve start pumping money into the stock market. The market environment at this point in time during the third Elliott wave is quite viable, is supporting the trend. So one of the reasons why the third Elliott wave is prolonged, it usually takes place during a beautiful or a healthy, okay, a financial market environment. The market sentiment at that point in time, generally speaking, globally, talking about the macroeconomic environment at that point in time should be bullish, all right? Market sentiment will be bullish, market environment viable, all right? You will see many financial instruments in that sector, all improving almost, especially the market leaders. Now, this stock is listed on the Dow 30. You want to know what are the market leaders for the Dow 30, you go to dayprotrader.com, click on Market Watch. This is about the trading triangle. The market first, the sector, before the individual financial instrument, the heart of the trading triangle, we have the market leaders, the economy news, and the fundamentals. All right. So during the third Elliott wave, the third Elliott wave will take place during a bullish market environment. If you are in a downtrend, you will notice that the market environment will be very bearish. Everybody, no one wants to touch the stock at that point in time. All right. The fundamental will be degrading. Okay. Many stocks will be failing the Google Asset test, as I posted to you at Joel Trio YouTube channel. Check the video, Google Asset test by Joel Trio. Many financial instruments will fail the Google Asset test, and the market environment will be so poor, and no one will dare to buy during that time. This is what can happen during the third Elliott wave in a downtrend. All right. All right. So during the third Elliott wave, as you can see, the big market players, which are the foundation of the trend, were the first people to buy. All right. They will remain in the trend during the third Elliott wave. In fact, during the third Elliott wave, as the general public join the first buyers, the first buyers will continue to buy. They'll continue to buy. Now they know that the trend, so they will achieve. You see, what I explained to you last time that the magnitude, the measuring stick that we use is the magnitude of the first wave. I don't want to repeat myself again here. So watch the video that I've been posting recently about why the fourth wave should not overlap the first wave, why there is equality between the first wave and the fifth wave, all at 2-4 Elliott wave YouTube channel. So once they achieve the same magnitude of the first wave during the third Elliott wave, and the price exceeded the magnitude of the first wave. You can see here how I put it here. You see, it went above that. You see how I put it here? It went above it and retest that zone. All right, so they will set a target. As after the first wave is completed and the second wave, is also completed, break out above the high of the first wave, we will use the magnitude of the first wave. That's our first conservative target. If the price fails to exceed this level, it's bearish. Now, the smart money know that as the price goes above that resistance level, they want to retest it. As you can see this candle here, they retest it. At this point in time, if they found out that now there is a support above the first original target, they will continue to buy. Again, they will use the same measuring stick for the second target. And if the second target is exceeded, they will move it again to the next level, and so on and so on. And the third wave can be extended for a long period of time. It makes sense? So there are many factors that are helping the third Elliott wave to be very, very strong. But the main reason is the fundamentals, is the market. We have the market environment should be viable. This is very, very important because we are trading first the market, and then the fundamentals are solid, all right, and the first buyers remain in place. The first buyers will use Google Finance, Yahoo Finance. They will maybe talking to the director directly. They may go and visit a factory and see exactly what is taking place, or they may just envision the future and know that this thing has a future to go and has a lot of profit to come. So they will start buying. So you see now, so if you look at this chart here, you may be wondering which resistance this first wave, I'll push down my MACD. I'll come back to MACD. I'll be recording another video about MACD and the Elliott wave, and I will explain to today. So you may be wondering, George, where are the resistance this one has taken out on the left-hand side? I'll show you. All right. Sometimes traders forget. A support level, you see here, there's this support level, it's key level. See how the price was going horizontal? This is a key level here. All right. There was one here. I'm going to zoom into it. Well, hold on a second. I'm going to zoom into it and you see everything clearly because some trader may be wondering which resistance on the left. You see this low here? I'm just going to draw a line there. See here? This one here. Put it down a bit. Like this, okay? So you see the low here, this low here. Okay, there's also high there, but I leave that. I'm paying attention to the low. And we're going to zoom into it, and you can see, pay attention. I'm going to get there soon. It's not easy. Then I move. I have to remember, that's what I'm saying to you. See, I hide the other section. I need to come back, remind myself, otherwise I'll be, okay? Is it become clearly now? You see now? You see this level here is a resistance level. You see these two candles, they break above it, okay? And then we have this level here. You see, it touch it here and then finally crash through it. Finally went above it, okay? And then we have the same, it went above it, yes, okay? And then the third one here, you see, it went through it, pulled back, and then finally went above it. So you see, 1, 2, 3 resistance on the left-hand side has been taken out. I will be recording another video when I will explain to you why the first wave is sometimes a complex Elliott wave. It's because of the resistance on the left-hand side. The price is trying to break. So one resistance at a time, one. Break the second one, break the third one, and then you have a complex first wave. It makes sense? Let's adjust my chart before I take another picture that is not reflecting everything, okay? It makes sense? It makes sense? It's also powerful. So the first reason for, okay, the extension of the third Elliott wave is what? Okay, market environment. Second reason, fundamentals. Third reason, okay, that we can also classify as the first, normally, the first bias, market participant, okay, are the real buyers. So the first the smart money, the bank, the big institution that were accumulating a stock because they have checked the fundamental, they have seen that the market environment is viable, they are loading it quietly. They didn't come out of the market, they remain in place because they know that a bigger trend, a bigger cycle is starting. So they are not going to move. And they will continue to buy. But as the second wave is now completed on a low volume, the technical trader realized that this is the beginning of the third wave. So apart from the first buyer, now we have stop loss be taken on the left-hand side by the first wave, which is the signature of the bulls, okay? Bearish trader that way in the market, their stop loss taken out. These stop loss orders, okay, are buy orders, in fact, because you have to buy to close your bearish position. You must sell to close a bullish position. So adding more fuel to the trend, all right? So the general public see now that the price going up, people start talking about it in the newspaper, all right? So now apart from the technical trader, the fundamental traders, stop loss be taken out, the general public start buying ground orders, everybody want to buy and hold, okay, for the futures, okay? And the market is crowded or saturated by the bulls. The opposite is also true in a downtrend. During the third Elliott wave, the market is saturated by the bear. So the market sentiment is bearish, the fundamentals are weak, okay? And the smart money knew that they should sell, and they start selling, and they continue to sell because they know that bearish trend has started, all right? Now the general public realize that they're going to wipe out their trading account, their investment portfolio. Everybody now is afraid. They say, I thought this stock was going to go up, even during the third bearish wave. During the bearish third wave, the late, okay, market participants are the general public, you see. So they don't realize that they should sell, cut their losses. They continue to buy because they think that the stock went down before, okay, all right, and they bought it and it went back up and they make some money. Now this time during the third Elliott wave, when they should just run away with their money, they continue to buy, expecting the stock to go up. But because it's a bearish trend, they close their position, okay, in the last minute, okay, and losing a vast amount of money, all right? So these are the reasons why, okay, the third Elliott wave, okay, is the longest wave. Remember, it's not always the longest wave, but it is very often, okay, the longest wave. The wave principle stated that the third Elliott wave should not be the shortest wave. It did not say it is the longest wave. All it says that it shouldn't be the shortest wave. I hope you have learned something from this video, and I will put into use, okay, to make excellent trading and investment and decision. We are the TSTW SYS 08 traders. Speak to you soon.